putting it into the life insurance, but
Yep.
then he's using that as his like checking account?
Yes. So he's putting all of his income into his bank, and he's taking the 130 grand that he has in the bank currently and putting it in up front also. So everything that would typically go into the bank, he's going to put into his bank. And he's going to be able to borrow 95% of the 130,000 after this company was 30 days, and have the rest of it available after year one by putting more cash into his policy. And so he's going to borrow against the money in his savings to be able to put money down on that land that he's going to buy, and then he's going to build it over the course of a year and have extra cash flow. And if you can see how the cash grows, this is how the cash in a policy grows, is it grows year over year. It's going to break even around year 3 or 4 and continue to grow on. And after 10 or 15 years, it gets a 50 to 100% return on investment year over year, which you can't get that anywhere, and you just have to be a little patient and disciplined. But you'll have that growing like that for the rest of your life. It's the only sure thing out there. And for a real estate investor, this is really important because they want all of it, every investment, especially real estate, it's all about leverage. And this allows you to leverage your money very quickly. Also leaving behind, this guy's he has 2 kids that are 3 and 15 months old, and he's leaving a $24 million death benefit behind to his family. And he's just like a normal working dude. Right? You might think that like 240 grand a year is a lot, but he's just a normal dude, works from home, happens to be a software engineer, so he has 2 $100,000 jobs is basically what it is, and he doesn't have many other assets. But if he makes one payment into his life insurance policy and then gets hit by a truck and dies, his wife and kids are going to get $24 million of death benefit.
Sorry, what's his monthly, what is he putting in monthly to
He's-
the life insurance?
He's putting in all 20 grand that he makes in his into his bank
So
account.
how is he like functioning?
What do you mean?
Like he's putting it into the life insurance, but
Yep.
then he's using that as his like checking account?
Yes.
So he's paying interest daily though?
No, because if he's constantly making more money, he's going to put it back into the policy. So you're
That is essentially his bank, which is exactly what you're talking
yes, you're just flowing it through the bank. You don't get a routing and account number, unfortunately, with a life insurance policy.
Well, that's what I'm saying. So
Yeah.
like, how do you pay your bills?
You just constantly move it from the bank to your bank, and from your bank to the bank. Yeah, so I'm doing this all the time. My wife just took out what'd you do, a $4,700, a little less than $5,000 policy loan from her policy on Sunday, and at the same time sitting next to her, I put $30,000 from my last commission check into my policy. You're paying what, $500 a month now, babe, into your policy? $500 a month. I pay $3,000 a month into my policy. My mom has a policy. I pay for my mom, dad, and sister's policies so that my whole family can participate. She pays for her 2 parents' policies, and our whole family has a family banking system so we can create generational wealth like the Rockefellers did through life insurance.
I mean, I'm impressed. I feel like my mind's being blown this morning.
That's, yeah, I mean, these are a bunch of, for the numbers people, I can send this out. This is a guy that came up to me and said, Josh, I got $1 million in cash I'm going to put down on a property. Why would I ever do this instead of pay cash? And without getting into the minutia, at the end of those 10 years with a 15% IRR and a 5% cap rate, which is kind of what Miami is right now, he would have $2.5 million of total assets if he sold it in 10 years. By utilizing life insurance, none of this really matters except for instead of $2.5 million, he'd have $3.2 million and leave $10 million behind to his family and continue getting $100,000 to $150,000 a year of free cash flow from dividends. That would never have been there if he just bought it in cash. Because as soon as you use cash, what happens to the cash? It's gone. And this allows you to leverage your money and continue growing your money. And Warren Buffett's #1 rule of money, never lose your money. All right, but everybody puts money in the market, everybody puts money in crypto, and if you sell anything, you're losing your money. The only things that we invest in as a family are things that are guaranteed never to lose money. And life insurance is guaranteed never to lose money. And multifamily real estate's as guaranteed as you can get in the real estate field. Never lose your money. And then my rule that we follow is to control your taxes. We used to say pay less in taxes, but then I'd have people say, well, I need to show something to buy a house or whatever. So I changed it to control your taxes. But you can do all of this through what we do. And Rockefellers have done this for generations. Ray Kroc at McDonald's did this when he bought McDonald's out. Disneyland in California is actually 50% financed from Walt Disney life insurance policy. When the Depression was happening in 1929, J.C. Penney was about to go bankrupt and borrowed 120 grand from his life insurance policy to keep the business afloat during the Depression. So that's really what I got for you guys today. You guys can scan this. It's a free ebook that kind of explains a little bit more of the basics of it. And the rest, I'm just open for questions of how you can utilize this for yourself and for your clients and what benefits that you could utilize this on. Yes, yeah, we transfer policies all the time.
Same with Columbus? Same with Columbus? Any other?
Yes, any other life insurance company, you can do a 1035 exchange, not 1031, 1035, and go for that's from life insurance to life insurance. It's like 1031's real estate to real estate, 1035's from investment to investment.
And do you sell life insurance?
Yeah.
Okay,
That's what I do.
Okay.
Yeah. That's what I do. We teach, this is our niche, and we teach people how to use their life insurance policy for this. But yeah, we sell all policies, and we do normal term policies too. Last week alone, I sold a $39 a month policy to someone I know that just needed to protect their family. And also last week sold a $10,000 a month policy at the same time. But that's really what we focus on. Just like if you guys are selling big homes in the Grove and your goal is to target people that can buy a $2-3 million home, but if your friend asks you to help them sell a property and it's only $500,000, you might help them out. That's how we operate too. Yeah, this book, Becoming Your Own Banker, is really the whole concept of it. They're $20. You can buy them on Amazon, and it's a 92-page book. About 15 of the pages are the acknowledgments and the copyright stuff, so there's really only 77 pages of the book, but this book has made us millions of dollars, and it'll make all of our clients millions of dollars too, and it can make you that type of money. Yeah, this is really the key to it all, and it's a very simple, easy to read book. She just finished it in Spanish, right? Yeah. Because I don't speak Spanish, if you couldn't tell. Yeah. But yeah, I mean, it's really just a different way to think. It's really, the whole concept is just a different way to think. And the biggest hurdle that we have in the beginning when we're talking to clients is that they're stuck in their stinking thinking. And we have to help them think differently. And as soon as that light bulb goes off, then they're like, how much money can I put in here? Can I get one for my mom, my dad, my kids, my whatever? Yeah, I mean, the real estate guy that we talked to just talked to him on Sunday, the Chattanooga guy, he wants to get policies on his 2 kids, his 1 grandkid, his wife. But up to that point, he was like super skeptical, and he needed one more call. And then I could tell he read the book twice, he watched a couple of my YouTube videos, and he got on that call like, I finally get it. And like, how do I do this now? And so that's really the big concept of it. Yeah.
Something practical for someone who knows nothing. Step 1 is just...
Step 1 is sit down with me and analyze your finances and figure out what fits for you.
Okay.
There's no cookie cutter system. It depends how it's going to be different if you're 25 and 65, different if you have a job or a business, different if you have a business or you're an investor. It's just whatever your goals are, we tailor the policy around those goals. Yeah. I got a guy, I just did a policy for a guy yesterday. He's like, I want to buy a car at the end of the year. So I'm reverse engineering how much cash he needs to put in and how much premium deposits he needs to make so he can have $50,000 at the end of the year and buy his wife a car in January. Yeah. It just depends on the situation. Cool?
Love it.
What are some key takeaways real quick before I get out of here? Some things that you learned. You can just call them out. What do you got?
Don't trust the banking system.
Don't trust the banks. Yep. Nelson Nash's number 3rd rule is don't do business with the banks. Yep. What else?
Don't lose your money.
Yeah, don't lose your money.
Lose your money.
All right, we get conditioned to it. You know, 72% of all money held for retirement is currently in the stock market. And in 1955, before the S&P was created, 0 of it was held in that, and 80% was held in life insurance. And then Wall Street and the government colluded together to create retirement accounts so that everybody, when they graduate or when they retire, they have to pay taxes. First thing that happens, you take money out of your 401k, you're in business with the government.
Well, I think we're like just so conditioned from our parents' generation and their
Yes.
parents' generation that this is what you do.
Yes.
You put your money in the bank and you pay your tax. You know,
Yes.
I think our whole foundation of the world is, I think, shifting slowly.
Yeah.
But it's, you know, it takes time to like understand a new system
Absolutely.
and like trust the new system.
Yeah. I mean, you guys are, everyone's 1099 real estate, right? I mean, every single one of you should have an LLC and never pay any money in taxes and write off every single dollar of everything that you do. And if you're paying $1 in taxes, unless it's because you're going to buy a home soon, or unless you're going to get a SBA loan soon, or unless you need to, there's absolutely 0 reason to pay $1 to Uncle Sam. And you shouldn't have to. This is going to be the first year that I pay taxes. Last year I got a tax refund. This year I'm going to pay $30,000 in taxes so I can get a $500,000 SBA loan to expand our business more. Other than that, there's no reason to pay taxes. And if you need help with that, there's nothing to do with selling life insurance, but I'll teach you how to do that too. All my clients, as soon as I say, how much do you spend on taxes? Whatever the heck they say, if it's $1 to $1 million, that's too much. Nobody should pay taxes. They don't deserve any of your money. And neither do the banks. The banks don't deserve your interest, and the government doesn't deserve your taxes. They didn't do anything for it. Yeah.
I'm excited. Well, thank you so much, Josh. That was
Absolutely.
great.
Absolutely. Thank you, guys.